How's it going, everyone? Today we're going to be looking at Google stocks Q2 2025 earnings. These earnings were absolutely phenomenal, and the stock's trading up 1.62% here in after hours. We're going to take a look at those numbers as well as the valuation of this company to see if it's a buy right now. But first things first, revenue and earnings per share beat expectations. You got revenue of $96.43 billion versus $94 billion expectations. Earnings per share was $2.31 versus $2.18 expectations. YouTube advertising revenue and Google Cloud revenue both beat expectations. So extremely impressive results from Google with the double beat. Revenue grew 14% year over year. Very impressive stuff with revenue growth. Research and development also increased 16% year over year, which is important to note because that will lead to them being able to develop better technologies, more innovative products that will lead this revenue growth in the future. So something to keep in mind. I mean, they are allotting a lot of capital to research and development now, but it's tending to be a good thing, especially with the impressive growth you're getting with this company. 19% year-over-year growth in net income, as well as 22% diluted earnings per share growth year-over-year. Insanely impressive stuff for a company that's very high market cap. If we look at their revenue breakdown, you're looking at Google search and other 12% year-over-year gain. YouTube ads increased 13% year-over-year. And also subscription platform and devices increased 20% year over year. And one of the most impressive segments of Google's business that increased over the past year has been their Google Cloud. Google Cloud revenue increased 32%. And you can see on the right here, operating margin improved from 11.3% in Q2 of 2024 to now 20.7% here in Q2 2025. So this is becoming a much more profitable segment of their business, and it's really leading to a lot of growth for this company now that it's becoming a lot more profitable. You can see capital expenditures has increased a lot, which is a criticism that this company is receiving. You can see the year-over-year growth in capital expenditures is up 70%, and a lot of this has to do with an increased spending on research and development, is also with purchases of property and equipment. You can see that increased substantially. So overall, the free cash flow still remains overall healthy, but you can see the earnings for this company has been extremely impressive. The PE also is another thing to mention. The PE currently for the past 12 trailing months is 21.3, and you're looking at forward PE of around 20, which is extremely nice price for a company that is growing at the rate they are. It is very impressive stuff. If you look at the history of the PE for Google stock, it has previously traded at a much higher PE. You look at 20 to 2022 is around like 25. Currently, we're at like 21. And if you look at the past decade, like 2014 to the 2016 range, Google stock was trading in the range of like a 30 PE. And really at the low points, it was trading around 28. So right now, Google stock is at a very, very attractive valuation. A lot of this has to do with people saying that ChatGPT is going to take away market share. That certainly could happen. But what you're seeing with the growth in Google Cloud and other segments of their business, especially with YouTube, is that this company is very diversified with their business segments. They're starting to diversify away from being totally reliant upon Google search revenue to be the driving factor of their business. I think that's what you're starting to see here is some diversification from this company to drive these other revenue sources. So I'm very satisfied with this earnings report. I think it's very impressive overall, but more impressive is the valuation of this company. I think that the ChatGPT story is very overdone. I don't think this company is under serious threat from ChatGPT. If we take a look at my portfolio, I own about $1,600 in Google stock. So I'm pretty happy with this. I do own Google stock. I have a bias in this that I just wanted to mention, but I'm a very big fan of Google as a company. I very much like what they're doing with their business, and I'm super satisfied with this earnings report. As far as analyst ratings, though, 83% buy, 17% hold, 0% sell. I think that's saying something right there. You're looking at median price forecast of $204 per share, and on the high end, $250 per share, which is 30% upside from $191 per share. So overall, I think this is an extremely impressive earnings report. It'll be interesting to see in the following weeks if Google starts to trade higher, if the big money starts to come into this stock, and people think that, yeah, this is too good of a valuation for a company growing at the rate they are. And it doesn't seem to be slowing down, because Q1 2025 earnings, which I have a video on my channel talking about that as well, were also just as impressive. So I think that's saying something. If you have a differing opinion, let me know in the comments. I try to give you as much value as I can in a small time frame so that you can keep going about your day with a more informed decision on your stock picking. Let me know if you got value from the video, and if you did, subscribe to my channel. Y'all have a good one.